Micron just lost 11% in a single day, and that memory chip giant decides the fate of your tech portfolio tonight. Wednesday, June 24, 2026. Like and subscribe for daily market updates. Today's agenda: Hook Market Snapshot, Macro and Central Banks, Geopolitical Status, Commodities and Crypto, Earnings, IPO and Deals, Closing Summary. Up next, Market Snapshot. It's Wednesday, June 24th, and the entire artificial intelligence trade is balanced on the edge of a single earnings report. After a punishing two-day slide that ripped through technology stocks and erased trillions in value, Wall Street has narrowed its attention to one company, Micron Technology, the memory chip maker, that has become the cleanest way to bet on the AI build-out. Micron reports tonight, right after the closing bell. Whether the last 2 days were a healthy gut check or the first real crack in the market's most crowded trade may come down to what that one report says about demand. But the real story driving all of this comes from Washington's latest moves on interest rates. Yesterday was difficult for big tech as the Nasdaq Composite fell more than 2% to approximately 25,600, while the S&P 500 dropped about 1.5% to roughly 7,365. The Dow Jones Industrial Average finished essentially flat because capital rotated within the market rather than leaving it entirely. Funds moved out of chip stocks into defensive names like Walmart, Procter & Gamble, and Johnson & Johnson. Damage was concentrated in memory and chip sectors. Micron slid more than 11% to around $1,080 ahead of its own results, dragging Nvidia, Taiwan Semiconductor, and the rest of the semiconductor pack down with it. Part of the trigger involved a Bank of America note warning that the Federal Reserve could raise rates as many as 3 times, delivering a jolt to richly valued growth stocks most sensitive to higher interest rates. Consequently, the fear gauge, the VIX, jumped toward 20, signaling increased nervousness among swing traders. This morning, futures are attempting to recover some losses, while Micron ticks higher before opening. One number worth noting is that the small-cap Russell 2000 remains this year's leader, up high single digits and well ahead of both the S&P and Nasdaq. This performance indicates investors have already been broadening their portfolios, hunting for value beyond mega-cap winners rather than chasing growth at any cost. This hawkish turn from central bank policy is rippling straight through commodities and precious metals right now. The backdrop driving markets remains the Federal Reserve. Last week, Chair Kevin Warsh presided over his first meeting as head of the Fed, where officials left benchmark rates unchanged between 3% and 3.25%. While this hold was anticipated, the dot plot revealed a surprise shift. For the first time, the median projection flipped from an expected rate cut to one hike. Now, 9 of 18 officials project at least one increase. Markets reacted swiftly. Odds of a September rate hike surged to roughly 2/3, up from under a third just days prior. Major banks like Deutsche Bank and Bank of America have already moved a September hike into their base cases. This in favor of higher rates turn stems from inflation data. May's headline inflation data hit 4.2%, the highest in 3 years, fueled by energy costs linked to the Iran conflict. However, excluding food and fuel, core inflation sits near 3%, a significant gap driving current debate. Tomorrow's PCE index, the Fed's preferred gauge, will offer further clarity. Currently, prices remain sticky at headline levels, while growth cools toward 2%. With a central bank so openly concerned about inflation rising above its target, it shows no intention of rescuing falling stock markets with premature rate cuts. The focus remains on whether cooling core trends can overcome persistent energy-driven challenges before policymakers feel compelled to tighten further in September. So how does all of that global political news affect your specific portfolio holdings tonight? Overseas, the dominant story is actually a step back from the brink. The United States and Iran have agreed on a 60-day roadmap toward a final peace deal, and Washington has handed Tehran a 60-day license to sell oil on world markets again. Traffic through the Strait of Hormuz, the narrow shipping choke point that carries a large slice of the world's crude, is picking back up, and a formal signing is reportedly set for this Friday in Switzerland. For markets, the read-through is simple. More oil flowing means lower energy prices, which takes pressure off the single biggest driver of this year's inflation. The catch is timing. The Fed has already turned in favor of higher rates, so cheaper oil is a relief valve, not yet a green light for rate cuts. And the truce is not signed yet. If the nuclear talks that follow break down, the energy risk premium can snap right back. Worth keeping in perspective, this isn't just a price dip. The The conflict had knocked more than 10 million barrels a day of Middle East output offline, so what we're watching now is a real supply crisis starting to unwind. And in the United Kingdom, Prime Minister Keir Starmer resigned this week, with Andy Burnham the likely successor. The pound has slipped on the political uncertainty. Which brings us back to tonight's main event, where everything hinges on one single earnings report release after the closing bell tomorrow night. That oil story is rippling straight through commodities. West Texas crude is sitting near $73 a barrel, a roughly 2-month low, with Brent, the global benchmark, just under 78, and Goldman Sachs has already trimmed its Brent forecast for late this year. Precious metals are caught in the crossfire of a strong dollar and rising yields. Gold has slipped to around $4,150 an ounce, while silver took the harder hit, dropping back near $62 after a blistering run earlier this year. Remember, silver wears two hats: part industrial metal, part a safe place to store wealth, so it tends to swing harder than gold in both directions. Over in crypto, the same forces are at work. Bitcoin is hovering around $62,000, close to multi-month lows, with $60,000 the line in the sand traders are watching. Ethereum is languishing near $1,660. This isn't really a crypto-specific story, it's the macro regime. When short-term government bonds pay you north of 4% with no risk, and the dollar is at its strongest in over a year, assets that throw off no yield struggle to compete. You can see it in the funds. Spot Bitcoin ETFs, the exchange-traded products that hold Bitcoin for everyday brokerage accounts, have bled roughly $4 billion over a recent multi-week stretch as big institutions step back. The mood, though, is less panic than patient, reducing risk, money to the sidelines until the rate picture clears. But beyond Micron, there are two more hinge points looming over your portfolio before Friday closes out next week, entirely right here in front of us today. Tonight's main event features Micron reporting after close. Analysts expect earnings near $20 a share on revenue of $34.5 billion, representing profit growth north of 900% versus last year. The driver is high bandwidth memory, HBM, specialized chips adjacent to AI processors. Micron states its entire supply is sold out through this year. Shares hit a record near $11,350 and $1 trillion valuation before shedding over 11% yesterday to around $10,075, with options traders bracing for another 15% swing on the print. This price targets perfection. Even strong results may fail if company outlook disappoints, so focus closely on forward outlooks and profit margins rather than headline numbers. A genuine bear case lurks beneath the euphoria. Memory remains a boom and bust sector. Rivals Samsung and SK Hynix race to add capacity, while Micron pours over $25 billion into new plants, an investment that only pays off if AI demand absorbs every chip produced. Last night offered another cautionary tale. FedEx beat sales and profit estimates yet fell about 6% after hours due to slowing growth concerns. A beaten estimate triggering a sell-off defines the current jumpy tape. One structural note for Monday involves Alphabet joining the Dow, replacing Verizon. Since the index is price-weighted, swapping in higher-priced Alphabet tilts this blue-chip benchmark further toward megacap tech and the AI trade. Finally, let's turn to closing summary. So where does that leave us? This is a market trying to work out whether AI optimism can survive a Fed that's leaning toward higher rates, not lower ones. The single biggest risk is sitting right in front of us, because so much of the market's value is now concentrated in a handful of AI names. A soft Micron number or a cautious outlook tonight could cascade through every chip stock and bleed into the whole index, handing the bears their confirmation. The single biggest opportunity is the flip side of that same coin. A blowout with confident company outlook could reignite the whole trade by tomorrow's open. Beyond tonight, the week has two more hinge points. Thursday's PCE inflation reading, which could harden or soften those September rate hike bets, and Friday's Russell reconstitution, the twice-a-year reshuffle where index funds are forced to buy the new additions and dump the deletions, routinely one of the highest volume trading days of the entire year. 3 catalysts, 3 days. If you want to walk into each one already knowing what's at stake, subscribe and turn on alerts. We'll be here before every bell. That's your market pulse for June 24th. So where does that leave us? This is a market trying to work out whether AI optimism can survive a Fed leaning toward higher rates instead of lower ones right now. The single biggest risk sits right in front of you watching closely today, because so much value concentrates within handfuls of names concentrated heavily inside artificial intelligence sectors, specifically speaking here. Beyond tonight, the week has two more hinge points. Thursday's PCE inflation reading, which could harden or soften those September rate hike bets, and Friday's Russell reconstitution, where index funds are forced to buy new additions, and dump deletions, routinely one of highest volume trading days entire year. Thanks for watching Market Pulse Daily.